Our next guest says the Fed's strategy isn't just a policy error, but a Ponzi scheme.
A new article explains the new buzzword Web3 and breaks down what the upcoming online era could look like.
Look, I think that a recession is almost inevitable.
Put simply, DeFi gives financial freedom back to the people.
Hey guys, this is the Alpha Drop podcast, which is presented by New Order and focuses on DeFi and macro analysis. I'm Contento. I work on the community/marketing side at New Order, and we're joined by, as always, the two Chads, BlkSwan and Mitch.
Hi, this is BlkSwan. I'm a fund manager outside of being a contributor at New Order and Frogs Anonymous, specialize in derivatives and multi-strategy, crypto, and traditional theme investments. Here at New Order, I focus on treasury management and macro themes.
Hey guys, my name is Mitch. I am focused on researching here at New Order, so pretty much coming up with new ideas for us to incubate in the DeFi ecosystem.
The Alpha Drop podcast is brought to you by New Order. New Order is a community-led incubator DAO that builds startups at the frontier of decentralized finance. We incubate and launch projects while accelerating early-stage DeFi protocols. New Order acts as a co-founder and works directly with teams by leveraging and deploying our network of developers, researchers, and business development experts. Our vision is to create the next generation of DeFi protocols by building alongside future leaders in the space and contributing intensively to innovative projects. If you're a founder looking to work on a new project or a builder looking to get involved in the DAO, head over to neworder.network to get started. All right, today on the macro front, we've been seeing some recent pullbacks in the S&P. The last couple of weeks' rally has been fueled primarily by the expectation that the Fed is going to be slowing down interest rates, roughly 75 basis points rather than the full 100. However, recent data with the new jobs report coming out so strong has kind of put a little bit of a halt on investor sentiment, given that a lot of big banks, Goldman Sachs, JP Morgan, and the folks are now looking at it like, well, the Fed might hike even harder. And what we're seeing in the markets today, which kind of builds an interesting picture, is since the June bottom in the S&P, we've seen the market rally roughly 15% off that June rally. A lot of this fueled by the kind of just a technical rally, and how we can kind of see this play out is when we look at the S&P 500, not just the S&P 500. I mean, when we look at the entire market index of different industries, we notice that there's a rotation going on. So over the past 6 months, what's really kind of outperformed the rest of the market has been energy, industrials, utilities, and commodities at the end of the day. A lot of the things that have been absolutely slaughtered, of course, has been your technology, your growth, value, especially the semiconductor companies. And as we kind of traverse through these bear markets, what often happens is as the market comes in, you always have a technical rally based bouncing off the lows. And so when we look at this chart, we rallied up to our 150-day moving averages, blue line right there. And you would think that Bitcoin would participate a little bit. And if Bitcoin is to follow suit with the S&P, we could see Bitcoin possibly rallying to 31,000. Now, do I think this is at all possible to happen? Over the next couple of months, I've been talking about this quite a bit, especially on the last episode. I mentioned that we're probably going to see a risk rally, given what's going on with the Fed rising rate hikes by 75 basis points rather than the full 100. On top of that, it's just a technical rotation. So what's going on right now is the Fed's going to be away from the market. They're on vacation right now until September. And so the kids are kind of out left to play while the adults are away. You can see the market probably rally up 4,200 on the S&P, 4,300 on the S&P before reversing course and heading back down. Some things I want to point out, though, is a big fueler behind this rally actually comes from this potential for rate cuts. This came out just yesterday, actually, and it highlights that there's actually 3 rate cuts that analysts on Wall Street are forecasting over the next year. Now, when we look at this market, right, we have inflation still kind of where it's at. The Fed has pushed very very harshly that, don't look at headline inflation, which includes food prices and gas prices, but to look at core. But the thing to look out for over the next couple months, especially in August, is to see if core inflation remains sticky. I believe over this next month, we will probably see a reduction in headline inflation. And of course, the Biden administration is going to take credit for that. And they're going to be like, oh, look what we did. But the core inflation, if that doesn't reduce, if it sticks, that's telling you there's a bigger problem on the horizon, right? And why I think it might do that is we've seen consumer credit blow through the absolute roof recently. And it's not just because the consumer is flushed with cash, but consumer credit is a reflection of how people are spending money with loans, with credit cards. The average American, average citizen in North America, I should say, has been blowing through their credit cards. Now it's roughly around 38%, which is the highest it's ever been since, hasn't been this high since 09. But these types of rates today are unprecedented. And you can't say that they're just flush with cash. Generally, when U.S. American citizens and most people start breaking into their credit cards, it's because they don't have anything else to go to. So what I'm looking forward for the next couple of months is a continued risk-on rally, probably through the rest of August, and then we'll see a rollover as we approach the next Fed meeting in September.
Awesome. Thanks, BlkSwan. I think we'll turn it over to Mitch to get some insight into what we're researching over at New Order.
Cool. Thanks, Contento. For those that don't know, beyond just like researching internally at New Order, I spend a little bit part of my day catching up on the daily DeFi news, as well as like writing weekly DeFi insight reports to make sure our community is well aware of what's going on in the space. So with that, I'm able to gather a lot of information, kind of see where the space is going to be moving in the short term and medium term. And then judging from that information, I can sort of project that out and try to think about where we're going to be at in the long term in terms of DeFi. So when looking at, this sort of layer one narrative and these layer one wars, obviously Ethereum still dominates all other alt layer ones. But, with new players coming in, we've seen like Aptos and Sui raise massive valuations. The space is becoming ever more competitive, right? And we still have Solana knocking on Ethereum's door. Avalanche is still making a push, right? So although I think Ethereum will win in this sort of short and medium term, especially during a bear market when people kind of settle in, long term, some of these other players will definitely eat up some market share. And it'll be interesting to see how they sort of pivot in order to have a competitive advantage against Ethereum. I mean, specifically in regards to Ethereum, the biggest news right now is the upcoming merge. What's supposed to come in the next 2 months. This is like definitely something to keep an eye on because it's sort of step one in the grand vision of Ethereum's roadmap. After the merge, they have like names for what's coming after the merge, the splurge, the surge, and so on, right? But this is really I'd say like precipice of like what Ethereum is going to sort of like become in the future. And then moving forward, when I'm looking at Ethereum trying to be this ultimate modular blockchain, we're going to see a lot more layer twos that are going to be sprouting up and trying to eat away market share from one another. Something interesting to note about that is like when you're considering these L2s, they're competing against one another. And if a lot of value gets flowed into these ecosystems, that's going to be spread across each of these L2s, as opposed to just say all the value being in Solana, which doesn't have any L2s, right? So, if all this value is spread across all these L2s and Solana is just accumulating all the value in their one ecosystem, Solana can use that to their advantage, right? And sort of then just build valuable products as where there's a massive competition going on in Ethereum. That's something that, I think is important to realize as these sort of like L2 wars play out, and Solana starts to try to eat away market share from them. Right now, like the total value locked in L2s, when looking at L2 beat, is, roughly over like 5 billion. And that seems to increase, which is a good sign as value starts to flow over to those ecosystems. And we're seeing large players like Arbitrum and Optimism really control a lot of that value. And I think it'll be interesting to see how this plays out with, the ZK rollups, like ZK Sync and ZK Stark, once they start to develop their L2s, whether or not they'll be able to take away market share from these optimistic rollups. But looking specifically at Arbitrum and Optimism, since a lot of the value is currently right there, Arbitrum really controls, I'd say, the value right now. However, Optimism is eating away at it. And, over the past week, they've increased their TVL by over 25%, right? And Arbitrum really hasn't increased their TVL, although a lot of that probably has to do with, different marketing ploys and coming out with, different announcements and whatnot. That's a pretty significant percentage to increase by over a week. Then I think it's definitely significant to note here. Moving forward, I just talk about, some of the different, the recent news over the past week. Obviously, a lot of news about different hacks and exploits. Like we saw the Solana wallet hack, which we'll get into a little bit more on this podcast. The Nomad Bridge exploit was absolutely massive and something that, we haven't really, we've seen these cross-chain bridges get hacked and stuff, and there's definitely going to be a need for a focus on security for these bridges if we want the space to move forward, right? We can't constantly be having close to $200 million hacks and think DeFi is going to take over TradFi anytime soon. And then some other like notable, I'd say, protocols that I'm kind of keeping my eye on as we're researching here at New Order. One is Manifold. So I wrote a little bit about this in the DeFi Insight report, but so Manifold is EVM middleware infrastructure that is like looking to scale, the Ethereum modular blockchain in essence, right? So there's other protocols that are, doing the same, right? So they're sort of attacking different layers of this modular tech stack and optimizing for that layer so that overall Ethereum will become a more scalable and secure blockchain. Celestia with their Celestiums are doing something similar there as a data availability layer. Socket is also pretty interesting. It's cross-messaging interoperability protocol that is trying to secure these data and asset transfers across different chains, right? So keeping an eye on these, other solutions to, these bridge exploits and cross-chain messaging protocols and middleware infrastructure. That's really where I think a lot of focus should be on for these developers in the near term. And then we can really start to focus on building out these, innovative DeFi dApps. Another protocol I'm super interested in is Serum on Solana. It's their central limit order book. It actually was kind of the vision for Solana as they're building it out. And then, Solana kind of turned in its own thing. But in its infancy, they just thought we were going to build a high-performant blockchain that was very composable, all centered around this central limit order book. And yeah, a lot of it is, but, it's kind of expanded into, beyond that, just being beyond a central limit order book. So those are some of the things I'm keeping my eye on. We can dive deeper into them.
Awesome. I think I want to circle back on Optimism. What are your thoughts on okay, when Arbitrum kind of drops or releases a token, do you think they're going to claw back some of that TVL that might have left Arbitrum? Because I think the TVL now is higher on Optimism than it is on Arbitrum by quite a margin.
No, it's actually higher on Arbitrum.
Oh, so I don't remember where I saw
Yeah,
that.
so it actually, last week, it was pretty significant, right? Arbitrum was around 2.6 and Optimism was, below 2, but now Optimism is above 2, 2.2 I'm looking at. So, I'm just looking right now, the 7-day change for Optimism's TVL is, an increase of almost 47%, which is crazy. Right?
Do you see Arbitrum's?
Yeah, that's increase of 5%.
Oh, okay. So it's still increasing. So actually, another thing, another kind of follow-up thought slash question. Do you think that because optimism has a single point of failure, or maybe not, maybe that's not the best choice of words, but maybe because they have Velodrome, and if Arbitrum can kind of maybe claw back some of that TVL that might have been taken from their chain, do you think that it's going to be more sticky TVL because there's already like a very rich ecosystem on Arbitrum, and that more and more people are more and more projects are looking to deploy on Arbitrum? Do you think that it's going to be something where Arbitrum is going to release a token, they're going to claw back TVL and more, and then that TVL is going to be more sticky because there's more dApps to play on and more protocols to be in, I guess?
Yeah, no, I think that's definitely a fair and good insight to have. I think what I like about Arbitrum is they weren't pushing for a token so fast. I think it caught their eye that they should probably release a token faster than they wanted to once Optimism released theirs, even though that was kind of a botched launch of a token. But it seemed to be working out now for Optimism as they are able to increase their market share. But yeah, I think since Arbitrum had that focus on being a little bit more long-term and wanting to build out their ecosystem a bit more before they actually release a token, that will be to their benefit, right? But I mean, these two L2s really just mirror themselves. At this point, it's all about how many different integrations they can make. What's their BD like? How many different protocols can they get to port over to their ecosystems, and then increase that sticky liquidity like you talked about, right? Because that's the most important thing. Obviously, this value will be transferred. There's a good amount of mercenary capital in DeFi, right? So that capital is going to be transferred over from one ecosystem to another. But what's important is maintaining that sticky capital that then can be used to actually build out the ecosystem in the long term.
Okay, yeah, that definitely makes sense. I'm gonna jump around a lot, but I actually wanted to circle back on something that we spoke about. I don't remember if it was off Alpha Drop or if it was on one of the previous Alpha Drops, but BlkSwan mentioned he mentioned, I don't remember when, that July is usually I guess an up month, you would say. I was curious to kind of see what's August like, because I feel like, yeah, I'm just gonna let you kind of answer that.
Yeah, so it was a June macro update. I posted a picture by Bespoke Investment Group. They have a wonderful historical chart going back 100 years. So in July, 75% of the time over the past 100 years, July has always been an up month. You can even look at it over the past 50 and 20 years. It's always been up roughly 1 to 1.5%. August, on the other hand, August is generally flat to negative. So one thing that you could expect is a lot of this kind of churn and burn action. And the reason why August is generally so flat is because the Fed doesn't meet them. A lot of policy, especially over the past 20 years, has been determined by what the Fed's doing, whether they're being easier or a little bit more tight on the monetary side. Because at the end of the day, prices and inflation especially is all done by a monetary phenomenon. It's how they increase money in the markets or decrease money in the markets. And so there's a saying in traditional finance: sell in May and go away, and then come back in August and see what's going on. So most of these institutional investors, they're getting back from their vacations now. They're starting to get reorganized and figuring out, okay, what's there to do, and looking back at all the data. And so August is generally pretty flat.
I mean, I have a follow-up question that might be kind of off topic. I mean, there was two kind of thoughts that I had. One was like, do you know the historical, I guess, Well, what would you call that? Like historical
Historical
market
average.
movement?
Yeah,
Average. Okay.
average.
What would it look like for quarters? Because I feel like quarter three would be like usually a kind of down quarter, or like a more difficult or more volatile quarter without even looking at any data.
It actually depends. I don't have the chart in front of me, but it does depend on. It depends on semiconductors at the end of the day. So one of the one really interesting thing about the stock market, especially over the past 40 years, is as we've kind of grown in this technology era, especially with the increased use of computers and machine learning and AI, semiconductors have actually led the market by roughly 6 to 8 months. And so, if you want to see which way the market's going, where to expect quarter three, is watch what semiconductor companies are doing. And right now, well, semiconductors rallied, and is primarily due to all this wonderful funding that the Congress just passed. Ironically, though, Intel, which they were benefited from that, instead of building a new semiconductor plant in the U.S., they're building it in Italy, which last I checked, is not in the U.S. So, a lot of these chip manufacturers rallied through this. What's different this time around is you have a lot more tension with China and Taiwan. Uh, Frankly, the only reason why the U.S. has any interest in that particular country is because we've outsourced all of our semiconductors to them. So if China were to ever make a move on Taiwan, you can kiss any sweet computers and video games and cars, especially new tech cars, goodbye for the next 5 years. So it's going to be really interesting seeing how this kind of unravels, especially through quarter four. Usually in quarter three, Apple and a lot of these tech companies are loading up on semiconductors from Q2 to Q3 to prep for the winter season. But Apple recently they've been informing their Taiwanese suppliers to, one second. They've been informing their Taiwanese suppliers to not expect a lot of demand, to slow down on the production a bit, as Apple themselves are expecting a slowdown in this Q4. On top of that, they've been also informing them to not say "made in Taiwan," in an attempt to not piss off any Chinese officials. So
That's interesting.
So yeah, that's interesting. So I guess like trying to tie this into crypto, how do you what are your expectations of how the macroeconomic environment will affect crypto for the remainder of the year, and maybe beyond, if you want to touch on that?
yeah, I actually think that, because right now what's going on is we're seeing just this absolute rotation from risk on to risk off. And during we're in a bear market rally, just so everyone's very clear with what we are in right now. So don't get suckered into this shit. As oh no, it's the next new leg. It's okay to be in cash right now. But what happens, and how you can tell it's a bear market rally, is we're rotating from industry to industry to industry. So we went from industrials and all that other stuff, utilities, those ran in rows. We're now going back into tech because tech was down 60%, right? So I expect crypto specifically to perform with tech. I think it's going to follow it throughout August, as we and then just kind of roll over a little bit, especially as we get into September. When the Fed comes back, they're going to be addressing the jobs numbers and the new inflation numbers, and that's really going to determine their stance. I personally think the Fed is bluffing when they were saying that we're just going to manage the numbers. The problem is they can't just manage the numbers. Okay, they also have to ensure that inflation isn't sticky. To do that, they have to hike 100 basis points. So when, modern Wall Street wakes up and drinks the Kool-Aid and says everything's all fine, it's time to go risk on again, it's going to be a very rude awakening when in September the Fed goes, no, we're going to hike a full 100, maybe 150, because you guys ran the market too hot. And clearly, core inflation, the one inflation number we said to focus on, is stickier than we expected. So I think through the rest of the year, you're going to see the market, you'll see it rally. It'll be a wonderful bear market rally. And historically speaking, with bear market rallies, true bear market rallies, you can expect like a 30, sometimes 40% rally. I mean, they get up there before heading back down. But when those numbers come out and the Fed comes out, that June bottom that we had, it's going to blow straight through that thing. It's going to be ugly.
That's crazy. Okay, I actually want to kind of transition back to what Mitch was talking about, and kind of like one of the themes that we've discussed today. So on the L1 wars, do we think that's over? Like, especially with like ETH 2.0 around the corner, what kind of like how are L1s going to be gaining market share from Ethereum now? Like, what's the differentiator? Why am I going to go from like, Ethereum to Sui or, Aptos or even Near?
I mean, I think the biggest thing for these other alt L1s is speed to market at this point, right? Like Ethereum's already laid out their roadmap. Everybody knows what they're trying to accomplish over the next, say, 5 to 10 years. And, they already have most of the value in the space, so they can use that to their advantage to continue and build out this sort of roadmap, right, in the most like efficient way. But say, with these other players coming in, Aptos, Sui, still considering like Solana, Avalanche, and even like Cosmos, right? If these sort of blockchain L1 blockchains can improve upon their existing tech in a faster manner than what Ethereum can, and then like sort of find their own competitive advantage for some factor that Ethereum's not good at right now, like say throughput, or transaction speed, right? Or becoming even more scalable than Ethereum in the near term, like that's really where they'll be able to take away a lot of market share. Developers will realize that. And then they're going to want to port over to those ecosystems and start building there.
I mean, but like, what is specifically, do you think, like, what's different about Sui that's going to like make people go there? Like a higher TPS, right?
Mm-hmm.
Like we're already seeing that sacrificing, security on Solana, for example.
Yeah.
So, yeah,
it'll be interesting to see. I mean, so the marketing for Aptos and Sui right now is like they're solving the blockchain trilemma, right? But we've seen pretty much every blockchain that comes out, new L1, I'd say, that comes out saying that exact same thing, right? Everyone's trying to solve for this, and they really boast that they're going to have high TPS on both of their own respective blockchains. However, I think we have to be wary of that. And people definitely should be wary of that and not necessarily like throw a bunch of cash into those ecosystems because it's not stress tested yet, right? Like Solana was really quick with their speed to market. They said, hey, we're going to build a high performant blockchain. It's going to have high TPS. It's going to be extremely composable, one single global state blockchain, right? But by going to market, I think quicker than what they wanted to, they experienced some faults, like there's the downtimes, right? There's multiple of those, and that's kind of the trade-off they made in order to go to market quicker. And I think they're recovering well from those periods of downtimes, and they're improving on their blockchains, but that's really it. Like if these blockchains can come out and they're quick, and they have that advantage over Ethereum of having higher transaction throughput, then they can really become a huge player.
I mean, in the end, though, even if a blockchain comes, like even if Sui, even if they have a higher TPS, like why am I going to go? I guess it's all about incentives too. So I mean, yeah, it does make sense. Okay, so
It's yeah, it's all about incentive. I mean, it is about incentives. It's about them building a narrative, right? But that's more so a narrative for investors. But really, at the end of the day, it's about the creating an environment that developers want to be in for the long term. I think about this the same way I think about like sort of capital, like sticky capital versus mercenary capital, right? Sticky capital is what you want. Also, sticky developers are what you want. You want them, to buy into a blockchain in the long term, and that way, that blockchain itself will become better overall. But if these developers, move from one to another, that's doing that blockchain no good, right? So they have to provide that, that sort of, I'd say, like developer experience in order for them to stay long term, and in order for them to continue to be a huge player, and in order for them to continue to eat away market share from Ethereum. But if that doesn't happen, then they're just going to die out and just be non-existent.
I mean, what's kind of interesting is you could kind of look at Terra. I may be wrong on this. I'm probably wrong on this, but like I feel like, I don't really remember or even, know what exactly the difference was between Terra and Ethereum and every other, L1. They just had really good incentives. Like they had, high APY, delta neutral strategies. They had strategies that are built on Anchor's yield. That those incentives kind of brought people to the chain. And I mean, I don't know how much of that capital was sticky because I mean, you're there for the APY, but maybe for development and devs, like I feel like it was somewhat sticky. What do you guys think?
Yeah, no, I agree to that. And that kind of goes back to what I was saying before is, they got people to come to their blockchain in the short term by increasing those incentives, increasing the APYs through Anchor, right? But nobody realized that once there's a market downturn, like they weren't thinking ahead and being like, what's going to happen to Terra then? Like, what are the faults in this platform? And then we saw exactly what happened, and that played out as so. And people should definitely take that, learn from history, and realize like, hey, we should be wary of these new blockchains that are saying, they're going to have high incentives, or they're, this most performant blockchain, extremely scalable. Like, take that with a grain of salt.
Buzzwords.
Yeah, actually, I'd say like dive into the docs, like talk with people, maybe test it out yourself when they become live, but do it slowly as opposed to just dumping a lot of capital in them and hoping that you can become rich in a couple of days. Like that's just not.
don't trust the marketing departments.
Yeah.
I was actually gonna say, what do you guys think about the ETH merge? Because you mentioned like, a new chain. I haven't really dug into this, but like a lot of people are speculating that there's gonna still be a proof of work ETH chain besides like ETC. There's still gonna be like ETH proof of work, and there's gonna be ETH proof of stake as well. Do you guys know anything about that?
Yeah, I think like Glows Capital on Twitter kind of sparked that feud a little bit. I think there will be people that stay on the ETH proof of work chain. Just like miners stay on that chain so they get money, right? There's going to be some sort of, I don't know what the right term for them are, but there's users that are Ethereum maxis, but only for proof of work, sort of kind of like that, how, the Bitcoin versus Ethereum debate went. Like the next thing might be Ethereum proof of work versus Ethereum proof of stake. And there will be a divide, right? And I think that'll be interesting to see how many people actually feel that way, that want to stay on the proof of work blockchain. But I mean, that's really to be determined.
I think this has a lot to do. I mean, this is very similar to what happened with Ethereum and Ethereum Classic. The whole idea behind why Ethereum Classic was kept is primarily because, people wanted to show that the instance was there, because the entire idea of forking something to Puritans, I guess you can say, is kind of sacrilege, right? You're going to have, like Mitch said, you're going to have all the old miners. There's a bunch of mining units just this year that were purchased. Those guys haven't recouped their losses yet, so they're going to try to squeeze every little last drop out of it as they can. And I think it'll be very interesting to see, what kind of plays out of it. But the main reason I think it's important to remember here is why this push for proof of stake is really coming is because there was a lot of late players to the crypto game, right? And proof of stake allows those late players who have the capital flow to just hop in. They can hop in there, pay the money to go buy as much Ethereum as they want, and then become a validator just like that. It's now more about equity based rather than what type of work they do. This benefits players with a lot of capital that don't want to run a lot of energy costs and keep the margins pretty high. So this big push is primarily coming from those folks at the end of the day, and you're always going to have some pushback against that.
Yeah, I agree. I mean, I think like in general, the merge will kind of cause like a fundamental shift in the way tokens are distributed. I think there'll still be then significant demand for ETH. Even if a lot of the merge is priced in ETH, I still think just the news surrounding it, pre and post merge, that'll increase demand, and ETH, like the rewards from participation in ETH staking will be, like, as BlkSwan said, like increasingly significant from different, MEV capture opportunities, to different priority fees, right? So in long term, you can't say that. I think it would be unwise to say that, the proof of work Ethereum blockchain is going to outcompete proof of stake. But it definitely in the short term could be kind of like, it could have a sort of like narrative behind it and people wanting to stay in that sort of ecosystem.
Mm-hmm. Yeah, that's okay. That's interesting. I mean, I think we're coming up on the final testnet merge. I don't know how to pronounce it properly. Goerli? How do you pronounce that? Goerli? I don't know, but like it looks like it's pretty close. Like I'm looking at like one of the last blocks that were mined. Total difficulty is 10,771 million. It needs like 10,790. Like it's really, it seems like it's probably next day or two away. So that's pretty interesting. Okay, well, I think that's a good place to close out. Thanks everyone for listening in, and catch us on the next one.
Thank you guys.
Thanks guys.